hang on a minute. Let's do this. Um, okay, Mike, explain margin trading to us, the uninitiated.
Margin trading.
Yeah.
It's all about trading the margin, Sean.
Johnny, you know this. I'll go through it anyway.
One sec.
I have an idea.
So basically the difference, and this is the real fun of the game, is that when you're spot trading, you're doing what they call actual price discovery. So you're buying and selling Bitcoin from one person or the other, yeah?
Mm-hmm.
And that's actually what sets the price. So if the last transaction was, a significant transaction, because there's rules around the game, was $3,612, the price is $3,612. Futures marketing is actually a bet. So there's no price discovery. So I could sell a futures contract to somebody at $12,000. Okay.
Right.
I do a typo, okay, and the contract price would be 12 grand, but it would have no impact on the actual price of Bitcoin.
So when somebody's doing a futures trade, so you're setting the trade, but somebody else is taking it off you. Like that's basically it, is it?
Yeah. So we're buying and selling betting slips.
Okay.
So it's kind of like the analogy, if you're into your horse racing, is kind of going. The spot market is the price you win if the horse comes first, second, or third. But the futures market is the bookie. Yeah, so I can bet on the thing coming fifth.
Yes.
It's not the result that counts. It's the question of whether I call the direction right or wrong.
Yeah.
So in that way, it's a bet. And the real thing about it is that, and I'll get on to kind of the wonders of BitMEX, and then the other aspect of it is that it is a leveraged bet. So that means that depending on the futures exchange that I'm using, I can take a dollar bet, okay, and the bookmaker, in this case the exchange, okay, will
loan you money.
Will loan me money to increase my bet. So I can take $1, and if you look at some of the forex markets, you can get 500 leverage. Okay, right. So I can take $1 and I can bet against yen, euro. Okay, and my trade size is 500 because I've got 500 leverage.
Right.
Okay, and those types of leverages exist in the forex world simply because the assets don't do these dramatic moves. Yeah. So you need that kind of leverage, but that's what leverage trading is.
To make it interesting, to make lads make money over it.
Yeah. Otherwise, if you're trading your $1 and the thing moves 0.1% today, you made 1 cent. Your margin, and you'll hear this term margin trading, leverage trading. Your margin is the amount that you are actually putting into the trade before the loan.
Right.
If that makes sense. So if
so
I take my
put 0.1 Bitcoin into it, that's what's at risk. Like that's my margin.
Yeah. Now the other thing that's very different about BitMEX and why it's so successful, if I'm margin trading oil futures, for example, yeah. Okay, on an exchange, I put up 30K into or 100K into my margin trading account, and the exchange will loan me $1 million, and I make $1 million bet. Okay,
right.
Virtually all futures market have unlimited liability. So let's say I make an absolute balls of it, yeah. Okay, and I end up losing 500,000. Okay, right. Obviously my 30K is written off, but now the exchange is going to come to me and say, by the way, you owe us 400 grand.
Lovely.
So that's kind of where this real fear of margin trading comes from, because in traditional markets, you have unlimited liability.
Right.
In the crypto space, it's a bit different. They have what they call auto liquidation. A liquidation is an event where you don't have sufficient margin to support your trade. So if the trade goes against you by, depending on the leverage or the multiplier, the amount you're borrowing to a certain way, they will automatically close your position, okay, and they will take the coins you have in the trade, Okay, and it's what's called auto liquidation rather than getting a margin call, which would be what would be happening in a traditional exchange. So that's a really positive thing about the futures markets in crypto, is that your liability is limited to what you put in the trade,
Yeah,
not
yeah.
even what you have in your account. If I decide to put zero point 0.1 of a Bitcoin at 100x long because I'm an idiot, and it goes sideways and I have 10 Bitcoins in my account, the only bit of my capital that's risk is the 0.1.
Okay, okay.
And this again is why you see and that makes it, and a lot of the volume on BitMEX is gamble money, because you see all these liquidations, laughing at them as we were a few minutes ago, and there's a new one, 6.5 grand. Okay, these are not people who are rolling the dice on their whole stack. They're just people who are literally just going, and there's a strategy there, just going, I'll take 1% of my trading stack and I'll fuck it in long. Yeah. Because
Yeah.
if the price moves with me, okay, I can end up 10, 20, 30, 40 times my money. That's why I, now,
Depends on obviously how much leverage you take on it, isn't that it?
yeah, there is some mathematics as to why that's really silly, and if anybody gets liquidated, they're silly. But just to explain, this kind of fear that exists out there, this fear. Oh, we've 6 new liquidations. Let's have a look at it just for the crack.
See the longs going up there and that there.
That was that longs or shorts, Johnny? Jesus,
Those
don't be so.
shorts.
They're shorts. Red is short. That's what we want.
So short. Okay.
Let's say the price is going down. Go on, thank you, fucker. So anyway, that's the basics of it. Then you've got 2 basic different types of contracts, and I'm going to open up this little BitMEX account we have here. Okay, and you've got what's called a perpetual contract, and a perpetual contract and now I get to BitMEX specifically. So that's what longing and short. And by the way, a long is where you're betting on the price going up, and a short is where you're betting on it going down. So
Not familiar enough with that.
But then you've got different types of contracts. So if we go to the types of contracts that BitMEX offer, you've got what they call a perpetual contract, which is what they offer on Bitcoin and Ethereum. And a perpetual contract is literally that. It's a contract that has no end date.
Right.
Okay, so this tank, please. See, do you see how enthusiastic I am? This is a contract where that it will run for as long as they decide to keep the instrument on the exchange. And then you have fixed term contracts. So if you look at Cardano, okay, Cardano has an expiry date, which I think in this case is the 29th of March.
Does it show it on you or no?
It should show it here, depth chart. Let's have a look. Contract expiry date, you can see it over there, Johnny, on the left-hand side.
Yeah. You see it there,
29th of, so in 30 days, this contract expires. Now, that doesn't mean anything. You can still buy and sell the contracts, yeah? So in all futures markets, you're buying a betting slip. Okay, whether it's a perpetual contract or a time-based contract, okay, and you can buy and sell those betting slips to other people. So I can take my long betting slip and go stick it up there and sell it. The difference in these kind of closed contracts is that if you just want to buy it for a period and forget about it, then your position is closed on at 12 o'clock on the 29th of March. Yeah.
Right, wrong. Yeah.
Whereas if you held it on a perpetual contract, it's there perpetually.
So long as you don't get liquidated.
So long as you don't get liquidated, and I'll come to how idiots get liquidated in a minute. And then there's one other really difference thing, which is the difference between an inverse contract and a linear contract. So Bitcoin and Ethereum are what they call inverse contracts. And what that means is that you're taking your bet in dollars, yeah? So you can see I've got here 100,000 just over on the left-hand side. I've got 100,000 bet, okay? I've gone short on Bitcoin, yeah? Okay, and that means that that's my bet. So as the price goes down, okay, my 100,000 goes up. Okay. Now, if the price goes down, and this is why it's called an inverse contract, and let's say, to keep the math simple, Bitcoin went from 10,000 to 5,000. So I would have entered basically with 10 Bitcoins for my 100 grand because it was at 10,000.
Mm-hmm.
Okay. And I exit at $5,000. Okay. So I've doubled my Bitcoin.
Right.
Do you see it? So because
Yeah,
my 100,000 now buys me 20 Bitcoins.
yeah.
Okay. Now, if it went up, it's a completely different scenario because my dollars buy me less Bitcoin. And that's why it's called an inverse contract. And that's why shorting is always more profitable than longing.
Yeah, okay.
In terms of Bitcoin. In terms of dollars, it makes no difference whatsoever, okay? But again, these are two different contract types, or two different classifications, perpetual and fixed date, and then subclasses of what they call an inverse swap contract. And an inverse simply means that effectively you're making more as it goes down because you're buying in dollars on the asset.
So your dollars, when they go down with your dollars won't go up though. If you were
No, so I bought $100,000 worth of Bitcoin at 10,000. Okay,
yeah.
and I'll get into the margin behind that. So I bought $100,000 worth of Bitcoin, which got me 10 Bitcoins when it was 10. Again, in the theoretical case of 10,000, and when it goes down to 5,000, if I'm shorted it, obviously I've shorted it. I end up with 20 Bitcoins.
Mm-hmm.
Okay.
So
And there's a bit more to it. Okay, but
how do you 100,000 value is still roughly there at the
well, no,
end?
I don't. That's just the kind of the example. I would actually have made a hell of a lot more. Okay, but the principle of this inverse contract is because you're dollar denominated. Because I would have made my 100,000 would have become say 300,000.
Because you exited the trade.
Yeah. So let's say I was 100,000, and if it went up to 15,000, I would have made 300,000. But since Bitcoin is now 15,000, my 300,000 converts into Bitcoin, which is less Bitcoin than that 300,000 if I was short and it went down. Does that make sense?
Mm-hmm. Mm-hmm.
So that's why people, and a lot of the reason the market is getting driven down is simply that it's exceptionally more profitable. Yeah, it's not a small bit more profitable. It's exceptionally more profitable to short when you have these inverse contracts.
Right.
The only inverse contracts on BitMEX are Ethereum and Bitcoin. The rest are linear, which means that you will make the same amount up or down. If you make the right, or lose the same amount up or down, it's a linear contract.
Okay.
So
Okay.
there's no kind of inbuilt disadvantage to Cardano or Litecoin or any of the other shit coins going up or down. The profit is the same whether they go up or down. Whereas
why is that? Why do you do it that way?
Simply because they're fixed term. Most fixed terms contracts
are fixed terms. Okay.
Yeah,
okay.
And whereas most perpetual contracts are. Sorry, lads, I've clicked the wrong fucking button there somehow.
In the dark, are you?
I am, yeah. I turned off my screen. There we go. We're back. Whereas most perpetual contracts are what they call inverse swap contracts. But there's no magic or mystery to it. It's simply the way it is. Now, if you look at BitMEX, and again, I'll go through it because it is a fucking monster. Okay, there's a couple of things that are really confusing about it, and the first thing is the fact that there are three prices. Okay, so you've got what's known as the index price, which is this BXBT, and on their little chart here, it's the blue line. Yeah, okay. And that is an aggregate of three of the larger spot Bitcoin exchanges. Okay, and that's just a representation of what the real price of Bitcoin is based on kind of an aggregate
averages.
Of the three, and the three exchanges are GDAX, Coinbase Pro.
Right. Okay. So be fairly good average, like.
Yeah, it's very representative. They're all non-USDT. They're all kind of real prices, and as you can see here in real time, the spot price varies from the index price. The index price is the price that people are selling the betting slip at. So you
Okay.
can see right now that there is the people are buying inside. You can see that at what is it, say 3,794, and the actual spot price of Bitcoin is 3,790, and you get 30, 40, $50 spreads on this sometimes.
Right.
Okay, and this shows you how that there and on some of the other coins you can get 10, 20% differentials. Okay. And finally, you've got what they call the mark price. And the mark price is a complicated calculation that BitMEX do to, and it's the one that is used to liquidate you. Okay. So the mark price is the important one. If you're ever stupid enough to have a trade that could potentially be liquidated, it will liquidate you with its automated liquidation engine, not based on the actual price of Bitcoin, not based on the futures or the betting slip price, but based on the mark price, which includes things like an insurance fund and all these other kind of things that is always going to be substantially different from either of these two. Now, the thing is, these things always converge. Yeah? If you look over time, okay, there's no substantial differential over time between the futures price and the index price, and indeed the mark price. But the mark price is there really to protect BitMEX, because they do have auto liquidation instead of this somebody calling you up from Hong Kong and going, you owe us $1 million. Yeah.
Okay.
And here's the problem with getting liquidated. If you let a trade get liquidated, you pay an unbelievable premium in terms of insurance. So BitMEX have an insurance pool in case there's a massive liquidation. There was one, I think, on KuCoin, one of them, which was $660 million that got liquidated. Yeah, their insurance pool wasn't big enough to cover it.
Right. Wow.
And BitMEX again are very, very smart about this in terms of doing that. So again, it sounds like some complexity. Why does it matter? Why it matters is that when I'm doing a stop, okay, if you look, I don't know if you can see over the left-hand side here, I can get 3 different prices to operate my stop around. Okay. I can have the mark price, which is kind of the magical. I can have the last, which is just the last price of the futures, or I can pick the index.
Okay.
You should never use the last price, even though I have it set there. You should either use the mark or the index, and the reason for that is that the futures price could spike, and you see these spikes here.
Last prices spike up or down, like.
Yeah, it can spike an awful lot, whereas, and that's just kind of, all of these gamblers rolling in at silly, margins, whereas you don't see that on the index price to the same extent. But you see that the kind of difference between the index and this. And so again, if you're into very, trading very, very tight like those.
So on this chart then, right?
Yep.
So the 3 prices are on the chart?
No, only the 2 prices. BitMEX will not tell you how they calculate the mark price, but the
So
mark price is, so the blue line, sorry, is the, now actually, let me just turn off my silly Ikamuku cloud. Let's just go turn that
Just
off.
hit
Hide. Okay, so there's a clean chart, okay?
Yeah.
So the index price, which is the aggregate, a good representation of the real Bitcoin price. Okay, is the blue line, and the other candles are the futures price.
Okay.
And you can see that they always diverge a bit. The futures market is never going to be exactly the same as the spot market.
Yeah.
And again, in kind of on BitMEX, it's not necessarily that spread, but like I've seen on Bitcoin Cash 20-30% differentials.
Okay. Wow.
But then if you're trading Bitcoin Cash, you should be taking outside the shot. Okay.
All right.
So then you go through all the little things in BitMEX. So BitMEX looks a bit complicated, but there's a customize button here. And these are all the different parts of the exchange. Order book, depth chart, price charts. I'll just quickly run through all of them. The order book is quite simple. The order book is down here. And the other thing with BitMEX is you can expand and kind of show all of these. Sorry, that's not that. This is the order book here. And the order book just shows you the price and where the orders are. So I can see here at 3,900, between 39 and 3010, we've got 8.2 million worth of orders on that side. And you can customize this. So I can go in and say, look, I like to see a bigger picture, so I only have this every $10, but I could go down and say, hang on, it's just it's not letting me change it, so I can change it like this. I'd say I want to see this in $half groupings, yeah? So
Okay.
now it's giving me the buy and sell orders. Okay, so these are just orders on the books, okay,
Yeah.
for every $0.50. And that's what the order book is. And it's quite useful in terms of looking for fake walls. Personally, I keep
Yeah.
mine up at $10, and you can expand that and you can look at this. So I can say here within, you know, up to 4,040, we have $116 million of people trying to go short, and on the other side, we have $118 million of people going long.
Right. Okay.
You have what's called the recent trade. This is where things are actually traded, and you can see them flying. Now, this is completely fucking useless. Okay.
Right.
And I'll tell you why it's completely useless, because it's full of $1, $2, fucking all these tiny little orders, yeah?
Right.
Which are noise. You have no interest in any of these. You're interested in the people. And that's why people use this site instead, because here you can see that right now, you know, we've got a $300,000 pump. If you're just watching the order book there, you could like $1. Who gives a fuck? $16. Like none of this is none of this is meaningful. Okay. So you've got that aspect
You
of
can
it.
actually trade that little. You can trade that little on BitMEX, can you?
You can do a $1 denomination, yeah.
Right.
And an awful lot of the bots, and again, there's lots of games, and I'll come to the games that people play, but sometimes this will flood red. Okay. And it floods red because you have an awful lot of gamblers sitting here trying to catch a knife, yeah? And there's a big flood of red, and it's a big flood of $1 and $2 orders that's trying to spoof them to short.
Right.
Okay, so you know, you kind of need to be fairly. It's there. You can't change it. I can't put a filter on here saying, "Look, I'm only interested in $20,000 orders."
Yeah.
It's really not that useful.
Right.
Okay, what is useful, strangely enough, is the charting. This is Trading View. So this is just an embedded Trading View. So you can add in all the indicators. It's exactly as Trading View
Still on BitMEX, but it's Trading View.
Yeah, it's Trading View, and so you can add all your favorite indicators. It's effectively a pro version. So as you saw there, I had so this is just Trading View. So obviously I'm not going to go through that, but you can add in like the Ikamuka cloud and all of that, and it's free. So you actually, I know people who just have a BitMEX account just to get the free version of this,
right.
rather than paying bloody you know, rather than paying
Trading View,
Trading View, yeah. So you can do that, and you can have all your indicators. So there's nothing unusual. Exactly Trading View, you can zoom out into different time frames and all that kind of stuff. Do all your TA or whatever it is. Then you have the depth chart. This is kind of one of the most useful. So the depth chart is a visual representation of the order book, yeah?
Right, okay.
And the depth chart you can zoom in and out of, yeah? So when you first log in, it'll be something like that. And this shows you where the orders are. So on the red side, this is if the price is going up, this is what has to be bought through, yeah? This is where people have orders on the books saying, I want to short at this price. And the green one is where people want to long at that price.
Right.
Okay.
You see your minus one or plus one there.
Yeah, so that's the percentage change from the current price. So I can look at that and say, okay, within 0.1%, clearly there's a lot more shorting on the books. So it's going to be more difficult for it to go up than down.
So you see there's 3,800 short where 3,000.
Well, actually, if you look over, sorry, Johnny, I'm pointing at the screen. If you look at the left-hand side, as I zoom it out, you see those numbers?
Oh, yes,
so
yes.
There's 5.6 million-ish going short within 0.2.
All right, okay. You have five and then 2.2.
And then 2.2. And this is also...
that be kind of trades or dollars?
That's in dollars.
Okay.
So these are, again, just a visual representation of the order book. So the same thing as this, except in a kind of an easier to view format. And this is why people put up fake walls. Okay. And I mean, I have seen $100 million fake walls. Well, that smack up a massive wall. And again, it's appealing to the psychology of the
So that's
BitMEX.
just in an order, like I want to say, buy 100 million worth of Bitcoin.
Yeah, I mean, it never gets executed. But when
Yeah.
you look at this and there is $100 million or $10 million sitting there, it actually does freak you out a bit, yeah?
Yeah.
But when people talk about fake walls, their purpose is to spoof you as a trader, yeah? And this is, and when you use this depth chart, it can be incredibly useful, but it can be incredibly spoofy. And people throw fake walls up because they work. If somebody threw up $100 million wall here, I guarantee you the price would move a couple of dollars just out of people freaking out. Yeah.
Right.
So it's a bit like spam email. People send it out. 99% of the population don't subscribe to it, but enough people do. And typically, where you see a fake wall, okay, they're trying to drive you into a direction where they want to pick up orders. Yeah. So that's kind of it. And now you get into the kind of the nuts and bolts of this, of how do you do orders? So there's two basic types of orders. There's a limit order and a market order. A limit order is where I type in what I want to buy. I want to buy $100 of Bitcoin at 3801, yeah? And I want to go short, okay? So when I click on that, it's going to come up with this, and it's going to tell me, I'm going to come to the 100x leverage I'm at the moment and explain that, okay? And it's going to tell me, okay, that's going to cost me, because I'm at 100x, it's going to cost me 0.00003 of a Bitcoin, but it's actually this, and it's $100, and my liquidation price is going to be 4077. Yeah, so let's stick it up there. Okay, so now you can see my orders here. Now for that order to get filled, obviously the price has to move towards it, or I can just market order.
Sorry, where's your order again?
Sorry,
point on your order. That's your order. Okay, there.
Yeah, you can see it. So it's $100.
Oh, is that hit the bottom there?
That's it there. Yeah. So if the price moves up there, I'm going to have bought $100 worth of shorts, because I'm at 100x, and I'll explain why I'm at 100x in a minute. Okay, it's going to cost me $1. Okay, so that $100 of order. So that's order type 1. Now, here's the advantage of a limit.
It costs you $1 to buy that.
Yes, to buy that $100 worth, because as you can see over here, I've got my leverage set to 100x.
Okay, yeah.
So this is where you set your leverage. Sorry, I should have
said
that. You can go, forget cross margin for a minute. You can go whatever you want to. Yeah. So
see the kind of danger sign there at the 100.
Oh yeah, no, 100's fucking suicidal. Okay, but it has a very specific purpose when used correctly, and I'll get to that. Okay, so here I have a situation where I've got that, and that's what's called a limit order. Now, the reason that you should do this is that when that limit order hits, BitMEX are going to pay me for that order being filled. They're going to pay me 0.25% of my contract value. So I'm going to get 25 cents if that order is filled. Most other exchanges, when an order is filled, you pay the exchange. Yeah.
Okay.
If I do a market order, okay, which is the other option, it's literally I'm going to do it because I'm mad. I'm going to risk $1 for the purpose of this video. Okay. When I hit buy or sell $100 here, okay, I'm just taking the live price. Yeah, it's just going to go out there and immediately execute.
Yeah.
It's the nearest offer. Actually, I'm not even going to do it because it'll mess up the numbers. I have nice round numbers here. And indeed, I'm going to cancel that limit order because I'm anal enough to do that. Hang on a minute. So let's just say it's active orders. Let's cancel that. Okay. And they're the two basic types of orders. And again, leverage. So I have available here in this account 0.4 of a Bitcoin. So let's just for the crack see, where are we at? We're on Bitcoin. Let's see if it'll get me 100,000. Yeah, there's 100,000. So and again, with this leverage, okay, I can buy $100,000 with 0.4. I can actually buy a bit more. Now, this is stupid stuff. You wouldn't do that. You should be trading at 3 to 5x maximum. Okay. Right. But if I wanted to do 100,000 at 3x, I need to have $33,000 worth of Bitcoin sitting available in my account. Yes, available is the amount that isn't currently committed to a trade.
Available,
that's what I don't. That's what I have that isn't acting as margin within a trade.
Yeah.
If that makes any sense.
Yeah.
So now you get into the real things, the other types of orders that you have here. So, and I'll use my chart here as an example, okay? So just to show you. So whenever you enter a trade in anything, but particularly in margin trading, okay, you need to put in a stop, okay? So I'm sorry, I'm just going to zoom this in. So, and let's just kind of clear all of this stuff, okay? So now this is just, and this bloody thing here, hang on, Ikamuku cloud. And we're going to hide. Okay, so here is where, unlike TradingView and most crypto exchanges where this is useful, you can see here that I entered this trade at 100,000 short, okay, at 40.57. Okay, the price is currently down here, and this is where my stop is, yeah?
Right.
So, and I can move that stop. I can go, do you want to fuck it? I'm going to move my stop there, yeah? That's it.
Okay.
Okay. Or I'm going to move it back to where it was because that's where it needs to be, okay?
Yeah.
Now, there are different types of stops. You've got three types of stops. You've got what's called the stop market, which is the only one you should use. And a stop market is like a market order versus a limit order, okay? Is that the way it works is that when the price of the three different assets, depending on which one you picked, yeah, mark, index, or last, okay, hits this price, okay, my 100,000 will be put onto the exchange and sold, which means I will not get the price I asked for.
Right. Okay. Okay.
I get a worse price.
Yeah.
Yeah, because the price is going to go up, and you can see a slippage of $10-20 sometimes. Yeah, so I currently have got my stop there at 828. Okay, and the way it works is that when the price goes to 828, it fucks my order onto the order books. But if Bitcoin's moving fast, it could be 850 before hi Nikki, before it hits. Yeah, if that makes sense.
Yeah.
So that's the first thing about the first thing about it. And again, a stop limit, let me just bring up the stop limit, is the most dangerous thing in the universe. Okay, so with Bitcoin. So stop limit says this, okay, there's my 100,000. Okay, I'm going to go, when Bitcoin hits $3,801, okay, I want to put an order on the books at, say, 3,802, yeah?
Okay.
So here's the mechanism. So when the price goes to 3,801, it will add the order to the book at 3,802. Now, if the price has gone to 3,804, my order doesn't execute.
Right.
Do you see the danger there?
Yeah.
So while people try to use it, because again, with a limit order, I get paid. So there's a financial justification. When Bitcoin does this, okay, your order is just blown. It's like having no stop.
Just go straight through it, like.
Straight through, and I know more people who get wrecked.
Okay, because you're setting your limit. You're setting. Okay, I understand. You're setting limits.
Now, there's a bit of sophisticated shit that you can do here, okay? You can do now there is a rationale to use them. So I can do a stop limit order, okay? And on what's called hang on, let me just delete this, on a different basis. And again, this is fairly advanced stuff. So you see, this is where it sticks it on and it's good until I cancel it, yeah?
Yeah.
I can do what's called a fill or kill. Okay, and this is where again you get fairly sophisticated. So basically, a fill or kill says we hit 8,001, it throws this on the exchange at 8,002. Okay, and it's either filled or killed. So it's filled or killed, and then I can have another stop limit behind it.
Okay, yes.
You just see what I mean. So but it's just not worth the fucking pain. It's not worth the risk.
And how many stop limits can you set?
You have unlimited number, as many as you want.
Okay.
But you can play these games, but to be honest, the justification for it is really not there. And then you have what's called.
And if you put your stop limit up, can you put your stop market behind that then?
Yeah.
So
Yeah,
you can't,
that's what a lot of people do, and I used to do it where I put in my stop limit because I want to pick up the 1/4% in fees. Um, and then I'll have a stop market behind it. But what you will find is you always get hit with the stop market, and your stop market is lower than where it or is
okay.
is
Yeah.
diverse from where it should have been.
It's
Yeah.
after, yeah.
So
You're putting it where you actually have the other one.
yeah, so
Yes.
you always get hit. So again, but anybody playing BitMEX, it is stop market all the fucking time, or you will get creamed. Okay.
Okay.
And the other types of stops are what they call trailing stop. Okay, and a trailing stop seems like a very useful thing. So the trailing stop says, I want to put in a stop now at this price, and on my 100,000. Okay, and I'm going to put in a trail value of 50. Yeah.
Mm.
Okay, and that means that my stop, because I'm short, will be $50 above the current price. Yeah. But as the price moves down,
That's not a percentage, though. That works on percentage, is it?
no, that's actual USD. You can see it there, yeah.
Yeah, but does it work on a percentage as your price stops down?
No, just literally just on the trail,
Okay.
trail value in dollars.
Okay, sorry, go on then.
So if I put in a trail, okay, and the price goes down, my stop follows the price.
Right.
Sounds useful, yeah. So
Yeah.
I go, do you want to know? I'm really not sure if this is going to go here or here or whatever. So if I stick in a trailing stop, then it means my stop is following the price.
Just
Okay.
waste a bit of waste time right now. So would have to drop by $50 or to work. Is that right?
It would have to drop by $50 to before my stop is at break even. Yeah.
Okay.
And that, again, there's nothing wrong with that per
Okay.
se.
Yeah.
The problem is, and in principle, it sounds like a really good idea. Yeah.
Mm-hmm.
So I stick in a trailing stop. The problem is when Bitcoin does a candle like this. Yeah.
Mm-hmm.
The price variation within a BART, as we love to call it in these things, is hundreds of dollars.
Mm.
This thing, if you ever watch it, is zooming up and down, which means that you lose all the advantage of this because you just get fucking stopped out.
Yeah.
You've called it right. This thing, the price in here is when this thing zooms as it does. So again, it's to explain what it is. It works pretty well in traditional markets. Really not useful when you get these huge price swings within a candle that you don't see. So, for example, if I'd gone short here with a $50 trading stop, okay, I'd expect to get out down here and then back up 50. I'd expect to have made the profit to here. I guarantee you, I probably would have been stopped out at a loss.
Okay, up here, right.
Yeah, simply because of the way that the thing spikes backwards and forwards. So again,
yeah.
trailing stops not really that I just not recommended. Put in
Well,
a stop.
for someone like me, I think the stock market probably just I won't be doing a lot of it.
Yeah, I'm gonna go. I'm just gonna go through the different order types and explain what they are. Just use stock market, and then finally you have take profit limit and take profit market. So this is where I go. Do you want to know? There's my 100 grand contract, and again it's exactly the same thing. I'm going to set a price of 3,876. And that's my target. And so this is how you can set an order to take profit at a specific price. Yeah.
Okay. Yeah.
So I can just quite simply put this in here and say, yeah, I want to close the trade automatically at a certain price.
Mm-hmm.
Now, again, limit, you get paid money.
Yeah, some things.
Yay, Nikki, of course you can. Yeah.
Sorry, I just fell asleep. I do apologize.
That's okay. Hey, listen, normally when I talk, that happens.
So several times the limit price, the stop limit doesn't work just on market.
Yeah, the stop limit does work, but it's a highly dangerous tool.
But it never worked. So I had to stop it as a market price. That's it.
Yeah.
Just market, close it, and that's it.
Yeah, I know so many people who got wrecked because the stop limit gets blown through, and it's easy to understand why. Is simply because the velocity and how much space you put between these. So basically, when you put in, if I put in again 8,001, I want to stop my short. That is the price that the order is put on the books, and the price I'm asking for is 8,002. But if the price is already 8,003. my order is never going to be filled.
Okay.
So that's why limit orders, get blown through. It's not that BitMEX are trying to screw people. It's simply that when Bitcoin moves, there's no point in Bitcoin is too volatile for, and particularly the futures market is too volatile for to take the risk of these. The advantage of doing it is, again, to go back to it, limit orders get paid fees, and market orders cost you money. But never, ever, ever use anything other than stop market unless you really, really know what you're doing, because you will just get screwed.
Right.
So you're going to not get the price that you ask. So you can see my stop there is at 828. Okay, I'll probably, if it happens, okay, if I do get stopped out here, I've got to expect a $10-20 difference. Yeah, so I'm going to get a lower price or a worse price, because lower doesn't mean anything depending on the direction, and I'm going to pay fees, so it's going to hurt. Yeah. But again, in BitMEX, never, ever, 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 okay, enter a trade without a stop. And then you come down to the basics of stop management. Yeah. Okay. I got in here in a profitable trade. Yeah. Okay. And I was 3x, and I'm at 100x now, and you're going to laugh at me for 100x. Hey, never go in a trade 100x, go in a 3 or 5. Okay. As soon as this trade became profitable, so you can see it became profitable. Okay. The first thing I did is my stop would have been here initially. Yeah. Okay.
Yeah.
Okay, I moved it to break even, a little bit above break even. So now, hey, whatever happens, you want to know, I'm not losing no money, yeah? And a lot of people kind of are afraid of this. They go, well, if the price goes up, and well, look, if the price goes up, I'll make a little profit and I'll go short again if I think it's short, yeah? So stop management is really important. Right now, I have my stop here for a whole load of reasons. Now, as soon as I have a trade locked in profit, I go to 100x, okay? There's a really good reason for this.
Okay, if it goes down.
No, it doesn't affect my trade at all. Okay, so I'm still trading 100,000 if I'm on 1x or 100x. Yeah. Okay, I can never lose money on the trade because my stop is below my entry price. So you can see at 100x, my liquidation price is 470. Yeah, which is like kind of up here somewhere. Yeah. Okay, but I'm out of the trade here. So the 100x, the 100x is irrelevant when I have my stop in profit. The reason that you move to maximum leverage when you have your trade locked in profit is that it releases equity. Okay, so to put it like this, when I went in at 3x on this, I needed $33,000.
Okay, very good. Yes.
To support my 100k. Yes.
Yeah.
As soon as it's locked in profit, okay, I move it to 100x. I now need $1,000 of margin to support my 100,000.
Very good.
Okay, whatever happens to the trade, it's 100,000. I'm going to win. I now have $32,000 that I can throw into a different trade.
Right.
So this, and people laugh at me when they look at this little demo account here, and they go, "You say never do this." I am, as soon as the trade's locked in profit, I'm releasing margin. Yeah. Because it doesn't make any difference. I can't get liquidated, yeah?
But if the trade goes in your direction, then obviously you won't get 100x on your trade. Like,
okay, this is where
you make. Is that right?
Well, no, you see, I'm taking profit on the size of the trade. So if Bitcoin goes down 50% from here, yeah, I'm basically going to make 50 grand. Okay, obviously it's not going to happen tonight. I wish it fucking did. Okay, the amount of margin that I have doesn't affect the absolute amount of profit I make. It just changes the percentage. So you see these silly percentages. Okay, if I put that to 10x, I'm at 69%.
Yeah.
It's return on equity, not return on my 100. It's not like my 100 grand is turned to 693 grand. Yeah, that's the return on my margin. So this thing again about upping leverage and what you can do, and what I've done in this trade, because I didn't go in at 100,000. I think I went in at 50,000. Yeah. Okay. I actually went in at about the top at 50k. Okay, we tanked, we went up a bit, I switched leverage, and then I added 25 or whatever K it is to it, dragged my dollar cost average down. So I didn't have to add any more Bitcoin into the account to do it. So again, there's lots of rationale that once you are ahead in a trade, and when I say ahead, I mean locked in, not if your stop isn't positive direction, okay, we're short here, to your entry, do not be at 100x ever. Do not be at fucking anything but 3 or 5x. As soon as you have a profit locked in, release your margin. Even if you decide not to use it, release your margin. Yeah.
Open position, you able to change the margin.
Oh, absolutely. You can change the margin at any point in it, Jess. As long as you have. So if I down margin here, I don't know if I have enough Bitcoin to down margin. Let's try it. So let's say I go to 50. Well, do I have enough margin? It's not screaming at me. So you see the way my profit is halved. My actual, but just to kind of demonstrate the point here, let me just drag this down. So all of a sudden, my available Bitcoin has gone down. So remember, I had 0.4 available Bitcoin.
Yeah.
Okay, I now have 0.1. My profit is halved in percentage terms, but I'm sorry, I just need to close this down. Let's just do this. Okay, but. And I'll just show you this in real time here. So you go down to this little thing here that's showing you my absolute position. So there's my Bitcoin trade, and I'm currently up 1.7 Bitcoins, yeah? That's what I'm going to get out of this right now if I close the trade. If I change the margin back to 100x, okay, you see my profit will jump up. Okay, I'm at 700%. But the amount of profit I make, percentage-wise changes, but it's exactly the same.
Okay.
So,
yeah,
so when you see these ridiculously large 700%, it's meaningless. You know, at 10x, that's 70%. Still a sweet fucking trade, don't get me wrong, okay? But it's all about, oh, Ethereum is looking sweet. Oh, okay, I like that on Ethereum. I took a big position on Ethereum. So again, you know, when you enter the trades, okay, it's very important that you use low leverage. It's very, very important that you do stop management, or you will get absolutely creamed in this business. Yeah, because the advantages of Bitcoin, okay, in terms of, well, let's look at my absolute. What's my absolute profit on this, just as a matter of interest? My absolute profit on this is probably about, yeah, it's about 70%. Yeah, okay, on this trade. So these percentages are meaningless. It's all about the Bitcoin. Yeah. Okay. The other reason I closed that is I looked at Ethereum and went, ooh, Ethereum just is sweet for a short. Okay, so I closed that. I was a very low leverage, and I went into S. And do you want to know something? I'm going to take out some of my Bitcoin on Ethereum, and I'm going to do exactly the same fucking thing. Yeah. Okay, so I'm going to enter the trade. I'm going to lock in a profit. And here's a great example. I don't know why I'm still at 25x because I was averaging. I'm going to move that up to the maximum 50x. So now you can see my available balance has gone from 0.4 to 1.3. Okay, my profit is doubled, but it makes no difference to the actual amount of money that I've made. And again, as you can see
just
here,
release your equity.
Yeah, so I could decide right now, I'm not going to
go to another trade.
Yeah, I could just decide to take that one Bitcoin that was released and add it into this trade.
Right, okay.
Yeah, I'm not going to. The only time you will ever do this is, you can see my stop
in profit
is below my entry price. Yeah. Now I've added massively to this trade, and this is where the leverage came. I started this Ethereum trade at 85,000. Yeah, and I've been playing this game with it all day, and I've got it up to 350k. Okay, so that's pretty low. Now most of that money has come in at this level because I think Ethereum is likely to break down, and it looks like I could be right. So I would have entered here, but as I re-enter, my dollar cost averaging is being pulled down, 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 down. Yeah. So again, this is the advantage of leveraging and re-leveraging, and why trading futures can be so lucrative. From the point of view that if you play the re-leverage game, you never go in at heavy leverage, you will lose your ass. Yeah, you never go in without a stop. Again, on this, I would have entered here. Okay, I could have taken a fucking lovely fat profit when we got to here, but I looked at it and said, do you want to know, I think the probability of this going down, Constantinople fork, I think Bitcoin's going down, I think this is a third of a coin, it's going to hell. So I have dragged my dollar cost average from here to here. Okay, but
so I'm profit.
Yeah, but I'm risking profit.
Yeah.
And that's the key thing. Yeah, I could add another 300. Oh, maybe not. I could add another. What the hell could that 1.3 Bitcoin? Over the crack. Let's see. I'll get 200 grand out of it. Yeah. Fuck it, I will. I get 500,000 out of it. I'm not doing it. Okay, I'm exposed enough. Okay, but again, this is, you know, if you get proficient at this game, it's not a question of leaving your trade alone. It's not just a question. Stop management is everything. You get your stop to break even or profit as soon as it's rational. My stop is here for the reason that if we spike this for a third time, we're going up. Yeah. End of fucking story. And even if I think we're going to go up and back down again, I'm still going to stop out. I'm going to take my profit. I'm going to look for my re-entry short. Okay, take profit while you can.
Profit. Yeah.
But do not do silly stops. And this is another huge mistake that you see people do. They go, let's say when I entered and my stop was here. Yeah, that's an irrational place for stop to be, because if it got there, it's going up. So I'm just giving them money now. Yeah.
Yeah.
So you need to keep your stops market rational, tight. I have no problem about getting stopped out with a profit and looking for a re-entry. But again, anyway, that's more trading than BitMEX. The other thing about BitMEX is, again, we're borrowing money to make the trades. Yeah. Okay, so the reason, again, that BitMEX is so innovative in the market is if you look at the other big, relatively big futures markets, BitMEX offers one, yeah? So I can leverage trade up to 3 or 5x on BitMEX. I don't like BitMEX, I don't trade them anyway. And again, 3 to 5x is wonderful, safe to enter a trade, but I'm interested in building leverage as I go down at no risk, like I've done here on my S, yeah? Where I basically more than tripled my position by adding no fucking Bitcoin to my account. Yeah. Again, just smart leveraging out. Now you can build massive positions. Yeah. With not a lot of money, but again, you know, you just need to do everything. Now on BitMEX, if I was borrowing 300k, which I think or 320k or whatever the hell I'm borrowing on this trade, I think 300k on this trade. Okay, I'm going to pay the interest on that trade until I close the trade. It's just costing me money. On BitMEX, you see over here on the right, okay, every 8 hours the interest is charged. So in 8 hours, you can see the funding rate on the Ethereum contract is 0.0134%. Yeah. Okay. Here's the funny thing. I'm getting paid that because the contract switches every 8 hours. Okay, where longs will pay shorts depending on where the money is sitting in the market. So unlike other futures exchanges where if you're borrowing the money, you're paying, here the interest actually changes every 8 hours, and a lot of the time if you're betting against the market, so I'm short, the market is obviously long, so I get paid money. So again, it doesn't look like much, but you can see there I'm going to make 0.0062 Bitcoin every 8 hours. Yeah. So again, I know if you hold a trade over a long period of time, by the way, it just balances to zero. Yeah. But you can see, for example, here, since I opened these, okay, I've made on S 0.042 of a Bitcoin. That's what I've made from interest, and on Bitcoin, I've lost 0.0289. So they balance out to kind of pretty much fucking nothing at the end of the day.
Yeah.
But again, this concept of interest and funding rates, and every so often, and how it affects the market, you will see a serious amount of interest, and it actually pushes people into that position to hold it, because it 0.1%, which I've seen, or 0.2% I've seen every 8 hours, is a serious amount of money.
Yeah.
But again, you know, if you're looking at holding a trade for a substantial period of time, a swing trade or whatever, it's going to balance to zero. But it can be. I mean, I've had a situation where I got paid half a Bitcoin in interest one day on a trade.
Right. Wow.
Yeah, I know. Yeah, it's fucking serious. Like that's fairly serious.
Yeah.
Okay. Other bits of it is is then just kind of the rest of it. So open positions. So here you can see I've got 2 trades. I've got 100k in one trade. I've 350,000 in another. That is 26 Bitcoin, and that's 1,320 28 shit coins, entry price, this, that, and the other. None of that matters because they're both stopped in profit, as you're saying. So you will see I've got like crazy kind of crazy margins on them. I've got maximum margin, but I've explained I've explained why. Yeah. Okay. So I am currently holding $450,000 of trade I can't lose money on. When I opens and then we get down to the margin. When I opens these trades, I had 2.7 Bitcoins. Okay. I have 1.3 Bitcoin. So I've got 1.4 Bitcoins supporting $450,000 of trade value that I can't lose money on. And again, so a lot of the BitMEX game is you start with ultra low leverage, you manage your stops, you always use stop market, you always use limit orders to entry. But once you're in a profitable trade, okay, you can turn very small amounts of money into very large trades, if that makes any sense. And that's kind of it. That's kind of the whole picture, Mr. Daly, unless you've anything else to add, other than wishes that the market tanks so I can fucking re-leverage again.
Well, I strangely enough want ETH to go up, but Bitcoin to tank.
Hey, ETH is my most profitable trade at the moment. I
know that's why I'm going.
Are you long on ETH? Are you, dude? Prick.
No, I'm not. I was sitting out on it. I'm looking at Bitcoin and wishing it would just die. But anyway, that's a different thing. No, I think you've covered everything on BitMEX there in a rapid amount of time. So
any questions? Because it's kind of frightening looking, but again, I go, Nicky, I think you're right. And I mean, if there's anything kind of about understanding the contract types, effectively. Oh yeah, look, here's the beauty of this. If this breaks this support line, I'm into my TA side now. Okay, I'm going to be so fucking happy. Let's just hope it happens while we're all sitting here. That's basically it. Okay, another couple of things about BitMEX. Okay, they don't do KYC AML. They don't even give you the option to do it. Yeah, all you need for a BitMEX account is a non-US IP address and an email address and some Bitcoin. So everything's settled in Bitcoin. A couple of things about why it's so important in terms of the market, which people tend to forget. So if you look at Bitcoin, okay, and probably an explanation for why the biggest crypto exchange on the planet is BitMEX. Okay, there it is there, number one. Okay, and that 700 million of trading volume is horrific. You typically see BitMEX will do 1.6 to 3 billion a day. Okay, it's just the number one exchange on the planet.
Because of the futures contracts.
Yes, because once futures became popular, people are pushing the spot price around to fulfill futures contracts. So when futures kind of came out in December, and BitMEX was there before December, but BitMEX caught the attention of, I'm just going to try and bring up a chart here, which is kind of quite interesting. XBT. Okay. Let me have a look here. Indicators. Put in volume here. So we got, let's do this weekly. Oh, hang on, this is Bitstamp, sorry. It's the wrong exchange. I need to, we'll do it here. Oh, we've broken support. Die, Bitcoin, die. A terrible thing to ask. But when you're short, you always want it to die. Okay. So while BitMEX has been around, since the dawn of time in the crypto space, you see it got absolutely no volume until, so people always say to me, oh my God, you're saying that, the futures market has changed the market. And it is fair to say that CME and CBOE only got live here, yeah. But BitMEX did as well. BitMEX only got volume after CBOE and CME. CME came live, and it attracted the attention of pro traders. And it is far easier to use than CBOE and CME, which are not inverse contracts and so on. So BitMEX picked up a lot of the pro traders. So people talk about the the futures markets in Chicago. Our volume isn't 1/10, it's not 1/5. Well, sorry, it isn't 5% of what BitMEX is doing. BitMEX is driving the crypto space. End of space. We've gone from the only way you could make money was the price going up to you make more money in the price going down. That's pretty sad, but that's just the way it is, unfortunately.
That will keep the price from rising a lot in the future, though.
It will until retail traders are no longer feeding the beast. That's my honest opinion of it. When there's no more juice to be taken from kind of naive traders, then the only way you can make money is to let the price rise.
And then drop it again.
Because you need new blood to come into it.
Yeah. Keep it going, like.
Yeah.
Well, it's going to be fairly volatile going up, then, isn't it? Realistically.
I think it normally is. Yeah, I think. Look, Bitcoin is always volatile, and as a trader, that's the most important thing. Do you want to know the worst period of trading Bitcoin ever was November of last year before the breakdown?
For a month, like.
This did nothing. Like, I fucking didn't move. That whole period, I was, I don't know, nearly threw myself off the balcony. Just move $1, do something, yeah. But volatility is back. Volatility will always be there, and that's it. But anyway, kind of back more onto the future side, as I say, it's a dangerous game to play futures if you allow it to be dangerous. But it can be an extremely lucrative game if you do structure your trades. Honest to Jesus, I think you make more money with effective tradecraft than you do by just knowing the price movements. So in other words, if you manage stops and you learn all of this stuff, you will make more money, because ultimately, whatever way you call it, you're going to be right enough time if you invest some time in tradecraft. And it looks like we're getting a BART.
Breaking down.
Come on, baby. Okay, I have two targets here. Okay, Sean's view of the Bitcoin world. Okay, yeah, there you go. I can't shut up about it. Is we got to challenge this line in the next few days.
That's what you for.
Yeah, well, it depends when we hit it. Yeah, but that's just my view of the planet. This looks like a bit of decent volume, and here, by the way, is why you should never use a trail stop. You see these jumps up and down. If you have a trail stop, you're creamed already.
Right. Okay.
Yeah, because the price movement is just bang, 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 bang. Yeah. And it's really funny to watch a trade where all of a sudden you're at 700-800%. But again, that's kind of only because of the 100x thing. Yeah.
Right.
So never worry about this. Worry about the absolute amount. And again, as I explained, there's really good reasons to use ultra high leverage to build positions as the price goes down. Yeah. You never go in at high leverage. You go in at uber low leverage, and you add, again, depending on what you think is going to happen in the market. As I said, I think I got in here with 85,000 contracts, whatever it was on Ethereum, and I'm now at 350,000. And at no point after the initial trade could I ever lose.
Right.
And that, again, is why futures trading can be so fucking lucrative if you just rationally leverage, re-leverage. Okay, if you're prepared to risk profit, yeah.
This could be a nice move in Bitcoin.
It's not stopping now, maybe. It's not stopping now. That is an absolute fact. So that's it, guys. Unless there's any questions, I've bored you enough with my bullshit.
No, that was cool. Actually, yeah,
do you want to show off now and go back to your Bitcoin trade there? It must be up to 1,000%, are you?
That is, yeah, it is. Yeah, it's just 914%, Mike. It's a bit disappointing, really. Yeah,
that's disappointing.
Yeah, but if they had 1,000 next on the leverage. Some other things that while I sit there and enjoy the perfect timing, leverage. Okay, so it looks like you can put in. There's a lot of rationale between saying, look, I don't want any of these leverages. You can actually just go in and type in a leverage. Okay.
Okay.
So if you want to use 15x, now this exchange is going to be dead because we're tanking. That's the other thing about BitMEX is you'll never catch a move because once it starts to move, you could not touch. Your order will never be processed till it dies down.
Yes, yes.
Then the other thing is what they call risk limit. So risk limit is the maximum trade size. So the maximum trade size when you come in here is 200 Bitcoin. Okay, you can up that to 1100 Bitcoin.
Go on.
Okay, so you can. So the maximum trade size you could ever make is now. The thing about it is that you pay to increase that. Yeah.
Right. Okay.
So, I mean, you're very, that doesn't matter if your trade ends up over 200 Bitcoin because you're in profit. That's not the point. It's the 200 Bitcoin is the initial maximum that you can do a trade with. Yeah. And, if you're, I know Johnny there with his 50,000 Bitcoin, might want to risk half of it. I'm sure if you phone them up, they probably do you a deal on more than 1100, dude.
Probably won't need to call him for a long time.
If you had 50,000 Bitcoin and you're fucking trading on BitMEX, you shouldn't be.
I think so, Bitcoin, man. I would. I'd probably watch the video here. I like the crack though.
Yeah. As I said, it's kind of, it's kind of spooky. Spooky. It just takes a bit of learning, and it's some basics on it. Yeah. Never, ever use. You never use anything other than stops, the tree prices and all that kind of carry on. But in terms of making money, you make money in this game, which you don't do in the spot market, by readjusting your trades. Yeah,
I agree. Getting a new entry for as it goes down.
Just building you, and on trading in general. By the way, I think I sent this. I was so confident to this move, I sent it out to the group because I've never fucking do that. Just scale in and out. Yeah, I didn't know it was going to top there, but I kind of 4 entry points, of which one I missed by 70 cents. I was a bit pissed off about that, but that's okay. Catch it on the way down. You should always scale in and out of trades. But once you're in a trade on something like BitMEX, okay, and you're confident of the play, and this play all of a sudden looks like genius, of course, it could have broken up and I would have lost some profit. I'm okay with that. Losing profit is easy. Yeah, it's when you lose fucking money. When you have a losing trade.
Absolutely, yeah. Profit straight.
So you can, with very small amounts, build very significant positions.
Right.
And that is why I would say that if you're into this game, BitMEX is really worth considering.
Yeah, it takes time, doesn't it? It takes time to be.
It does take time, and again, there's lots of videos out there, but while kind of there's so much going on and it's so customizable, I mean, ultimately just keep an eye on your leverage, your stops, and always try. If you on any trade, just try to get to a profit first, yeah. Because once you're in a profit, okay, the world is very different. I see so many people, even in the spot market, won't move a stop to the point where they're at least break even. It makes no sense.
Yeah. You're safe then, at least, huh?
Yeah, well, at least you can't lose, yeah, or make a little bit. I mean, because if the price goes against you,
that's like me up in the roof without scaffolding.
Yeah, exactly, Johnny. Yeah.
Same thing,
Yeah, exactly, yeah.
I have done it, but I don't like it.
Dude, I fell off a roof with no scaffolding and broke my back. So
you don't like it either.
No. I don't do roofs anymore.
Okay, well, I always put a stop in there. You see.
yeah. When the market goes against you, you do want to stop. Trust me. So that's it. Now again, just to say, leverage is a dangerous beast. But once you've got to stop market in, leverage is your best friend. So enter 1x for fuck's sake. Yeah, it doesn't make any difference. But once you can get your toe in the water of a move, okay. For example, if you got just as a perfect example, this is a classic 1, 2, 3, 4, 5 Elliott wave count. Yeah, like once it made the first move, it had to make the other 2. So you could have got in here at 3, jammed up. You could, you would have locked in your profit here at 100x, and now you can really begin to play this game. Yeah, and this is what I'm looking for. So I view this simply as the second position I can leverage at here. So the market goes with me. Yeah.
Just a clear repeat. So once you lock in at the 100x, right?
Yeah.
So you own your lease and your equity that you had.
Yeah. So if
the trade that you set up already isn't being 100x, is that right?
No, it's at 100x. I'm just releasing. So if I was at 10x for say a 10 Bitcoin trade, just to keep it simple, yeah, I needed 1 Bitcoin to support the trade in
That's
my
right. Yeah.
margin account.
Yeah.
Yeah.
Yeah. Yeah.
When I go to 100x, okay, um, I'm going to take out 0.9 available for me to add to the trade, or to add to, or to do nothing with. Yeah.
Yeah.
But the trade doesn't change. The
That's
percentage changes because it's a percentage of my margin, but the absolute amount of Bitcoin I'm going to win or lose doesn't change. Yeah. But what it does mean is that you can then add into the trade. You can decide again if you want to. Okay, I had 1 Bitcoin. Okay, I committed it to get into the trade at a low margin. I'm locked into a profit. So now I'll hit 100x. Now I have 0.9. So I can now actually do 9 times more if it makes sense. I'm not saying it does. It depends on the trade. So all of a sudden I can do 9 times more size of the trade.
right. Okay.
Okay, with no risk, as long as my dollar cost average is always above my stop price. And again, that's kind of, you know, one of those things that, you know, very, very small amounts, if you can call the market in these kind of step moves, can become pretty damn lucrative. And I would suggest, you know, if you're going to play this game, start with something very small.
Learn it.
Stop fucking stops everywhere. Stop into profit as soon as you can. Stop market, never use stop limit, and start low leverage. And if you get into a win, hey, play the fucking game. Yeah.
Yeah. Well, yeah.
Because
Cool.
remember, 0.1 of a Bitcoin, okay, can be a 10 Bitcoin trade.
Which is a lot.
It's a fucking, that's, you know, 30 odd grand trade
Sure,
for 300 quid. You don't go in at that, okay? Just so I can fucking keep repeating. You do not go into a trade at anything above 5x unless you're a complete fucking psycho.
Yeah, but
Mike, what did you go into your trade at?
25x.
Good man. That's second. I love to see that. How's that working out?
I've upped it to 50x at this stage.
Good man. Yeah. Once you hit that 100x, that's it, guys. I don't know what else to say to you.
No,
other
listen,
than let's hope it keeps fucking tanking.
just have to take a chance on now and go for some evening.
Yeah, I definitely. You know, again, you can see from like I started this account with what 2.8 of a Bitcoin or something, yeah, and I have 450 grand to trade, and I only set this up on Sunday. Now,
Right.
this has been, now, by the way, that is not fucking usual, okay, just to make that clear. This was just the perfect storm. It was one of those one trade a year where it was just so fucking blindingly obvious. I even told people about it, which I never do, yeah, other than saying Bitcoin's going down. So,
fair play to you for that, man.
yeah, and you know, Nikki, if you're wondering, myself and Mr. Daly there, the attractive Steven Seagal looking fella, second down, is
That's definitely not me anyway.
Okay,
look, it's definitely not me. Myself and Mike are online 12 to 16 hours a day, same thing. Normally we talk about cooking and Bitcoin. So if you want to join, if you need any help, we can give you a go for it. Drop in anytime.
We'll do that.
Yeah, we're always here boring each other.
Sean, are you recording this right now?
Yeah, I did record it for strange reasons.
Strange reasons?
I don't know why I recorded it. I was going, there's a record button, and I went, oh,
yeah,
go on.
I had to record as I fell asleep. So
listen, I don't think you should be saying you fell asleep while I was imparting such fucking wonderful knowledge.
I heard all the new things what we're talking about, so I just really would love to watch it.
Well, we have a YouTube channel. I'll look at it and decide if it's that. If not, if you ever need anything, Nikki, we are online 12, 16 hours a day.
Okay.
Because we have no life. In fact, I'm actually 17 and Mike is 16, but this is what you look like after playing this fucking game. So
this is the channel what you're using, what you should send out.
Maybe
what's that?
This is the channel what you're using.
Yeah, this link here is where we're if we're not online, we'd be online an hour later. Yeah, we're pretty much here all the time.
Okay.
That's because we're.
If you're able to send me in private this recording, I would welcome that.
Yeah, I'll load it up into private YouTube and I'll send you a link to it.
Thank you so much.
No problems. Listen, guys, I going to now try and get the smell of cigarette smoke out of the house before my better half comes home.
Okay, listen, Sean.
Yep.
Nick, Nikki, Mike, see you later, guys. Head away.
Take it easy, folks.
Thanks a million, lads.
Thank you.
Bye-bye.
Cheers. Let's pray for the dump to keep going.
Okay,
Take it
well,
easy.
I am for you, man.
Your
Cheers.
S looks good.
Is S dying, is it? Oh, good. Hang on. How bad is that? Oh, fucking lovely. Not terrible. You get in this game, you just hope hope they all go to 0. Yeah, that
Well,
is.
I don't know if you wanted to go to 0, but
I take $1.
But it's Ethereum right now, yeah? All right.
Yeah, I like that. I like that a lot because
So
that's a big. That's a big.
start your short here, Sean?
Sorry.
Where did you start your short here?
I just so if you bring up here, I actually started it up here. Okay, and then I've been adding to the trade, so you can see I've got 350 contracts at the moment, but that's because I've been doing what I was saying. I started with low leverage and added, and obviously when you add to the trade as you're going down, your dollar cost average is coming down. So I tried to put my dollar cost average in the middle of that wedge, thinking there's no way we'd hit it. So that's where my final entry is 145. I think I started at 158 or 59 because I kept adding. I mean, the trade is about 4 times bigger than it started, but I'm stopped into, whatever happens here, I'm going to make money out of it. But I really like S to break down because of the hard fork anyway. Yeah. I think the fork is either going to be cancelled, be a disaster, or classically after fork. Typically, Ethereum takes a 20% drop after a fork. So that was kind of my thinking. I thought Bitcoin is going down anyway. Ethereum goes down, so it's kind of a nice, and it's turned out to be a nice short. It's turned out to be a very nice short so far. So what I'll do here is I'll wait for it to settle, and I'm going to drag my stop down. Yeah. So again, that's stop management is, always try to protect your profit. So I'll probably look at putting my stop at around $132, yeah, on the basis that there's a decent chance we go back up maybe and retest this level. But yeah, I'll probably you won't be able to do anything on BitMEX at the moment because once something's tanking like this. But yeah, I'll move my stop as soon as I can, and it's a sweet trade, yeah. It's a nice one.
Yeah.
Now, again, people look at that and go, well, you entered here. I mean, I'm still making all the profit from up here for the dollars I put in, if you see what I mean. I'm just now making more. So, so if I hadn't modified my trade, okay, the 50,000 contracts, whatever it was I originally in, I'm still making the money off that. But now I'm making more from the dollars I added in here. But it's moved less, so it's kind of so I make all the money from the first one. But again, this is the kind of the modifying the leverages where you're just trying to get, when you've got a move like this, and hopefully the move sticks, you never know in this game, is there's nothing wrong if you believe that the market is going down in continuing to build, as long as your stop is if your short is beneath your entry, you can't lose. So a lot of people would, in fact, Mike was trying to get me to foam out of trade the other day. He was gone. We hit down. He's like, close it and re-enter. I said, no, I don't re-enter trades like that. If I think it's going down, I'm going to try and build the position more.
I just wanted you to lose money. That's as simple as that. I didn't really care what it did.
Bastard. So I don't know, Nikki. I hate telling people to futures trade. There are some advantages to it. If the trade goes against you, it sucks. I go back to this. This is going to this 40 to this. I don't know if you. I don't tweet, but I have a Twitter account to follow crypto stuff. This is wrecked at BitMEX, and this is just a list of all the liquidations. Okay, so you can see somebody.
That's a Twitter account.
What?
This is your Twitter account.
Yeah, this is not mine. This is a Twitter that we follow, and what it is, it's a automated bot that tells you all the liquidations on BitMEX. So people lose an awful lot of money pretty fast, yeah, because
I'm just kind of testing. I have just small money on it,
yeah,
and maybe I had 2 trades on it, but I haven't been liquidated yet.
Okay, well, you should never, whatever, let's say your liquidation price is, even if you say, look, just put your stop away from your liquidation price, because you will, the liquidation price includes insurance. So even financially, if you say, look, I want to leave it run till liquidation because that's just how I want it, even if you put it a buck beneath or above, depending if you're long or short, okay, you will actually save quite a little bit of Bitcoin, because if you stop rather than liquidate, you don't pay the insurance premium.
I see.
So you should never have a trade without a stop. That's just, seriously, don't do it. And even if you go, look, I want to do this because it's a bit of fun or whatever, and people have a lot of fun on BitMEX, and my liquidation price is like 3,800. Okay, you know, have your stop at $3 to $5 beneath it, and you'll be surprised at how much Bitcoin you get back in relative terms. But if you do get liquidated, you contribute an unbelievable amount of money that you don't need to, because you should just have a stop beneath it. You shouldn't, you really, I mean, it's the old mathematical thing, you know, if you lose 90% of your stack in a trade, you've got to 10x to get back. Don't lose 90% in a trade is the answer, yeah? If that makes sense.
Yeah, of course.
That's kind of as much bullshit as I can talk in one evening. Well, I could talk a lot more bullshit, but in terms of, hopefully that was useful, Nikki.
But you love talking, Sean, no?
Oh yeah, I could get an Olympic gold medal for talking shit.
The shit is for you, really, why you? Well, why you?
Right, I am now going to go and have another smoke.
So much, and have a good night, guys.
Okay, take it easy, Nikki. Cheers.
Thank you.
Bye. Bye.
Take care.